Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is October 26, 2019, and this is the weekend market review where we take a look at the markets from a weekly perspective to get a better sense of where we have been, where we are, and where we're likely headed. But before I go into it, I want to make it a very, very important announcement to Moneyology. We are launching a new Patreon campaign, which will allow folks to be able to purchase videos in the uranium sector as well as the precious metal sector for the time being for just $10 a month. So if you become part of the uranium video club, if you will, for $10 a month, you'll get access to every premium uranium video that we post on moneyology.com. And the same for if you become members of the precious metals premium club through Patreon for $10 a month. Also, we are launching a Moneyology stock club as well, where we'll send out every Sunday night, we'll send out one stock pick from monthly, weekly, daily perspectives, and that we believe has a great probability of breaking out or potentially has just broken out to the upside and has great upside potential. And that is available to the stock club subscribers for just $1 a week, so $4 a month will get you access to that content. And of course, if you're a Moneyology premium member through the website, you'll have access to all of those and more. And I would love to know what you guys think. Send me your feedback, and would love for you guys to become a part of our community. So let's start with the 10-year U.S. Treasury. So this one is breaking out, and the first thing that I see here is positive momentum right now. We're just at 1.8, and momentum is higher today than when we were at 1.9. That's a very positive sign, and I think we're headed towards that 2.1 level. So a lot more upside on the 10-year Treasury. That means that the yield curve is becoming more steep, which means that the two-year yield is dropping, and the 10-year yield curve is rising, which means practically that the overall economy is strengthening, and that's a bullish sign that we want to see. Notice PPO is at the highest levels in over 2 years, guys. That's a very, very positive sign for the overall economy. Here's the Dow Jones 2500 index, bounced off that 13-week EMA and is just about ready to break to all-time highs. And this negative divergence that we've been pointing out for a long time is effectively null and void because we just broke out above this downtrend. And looks like there's going to be some continuation. Notice PPO is on the verge of breaking out to the upside. I'm very confident that we're going to break out above that 7,400 level and to new highs relatively soon. Dr. Copper has broken out above the 50 RSI. Very, very positive sign, again, with positive divergence relative to previous highs. PPO is at its highest level since I would say, well, not only is it at the highest level, but it's in a positive direction. The last time we were there is basically February of this year. So copper is looking great. We're going to just based on this, we're going to make a premium review video analyzing the copper sector this week, and we're going to look at some of the names that we ought to be looking at, considering that this breakout is very, very close to taking place. Emerging markets, beautiful breakout of the symmetrical triangle. 13 EMA has just crossed above the 26, so you've got a golden cross. We've broken above the 50 RSI, and this looks very, very strong. I expect us to make a run at a minimum towards that 50 and a half level over the next few months. So a lot of upside in emerging markets. Last time we were at these levels, again, around 2009, early of 2019, and we're starting to get there again. Gold, despite the global markets breaking out, gold actually had a great week last week, and I think is on the verge of a new leg higher. We're looking at a lot of different charts and various different time frames and perspectives, and I think precious metals are setting up very, very nicely for additional upside over the coming weeks and months. High yield bond ETF breaking out to new all-time highs here is a very, very bullish sign. You typically don't expect to see that in bear markets. And I will say there's slight negative divergence from here to where we are today, but I'll give it a couple more weeks before I can say that that's a negative sign. Let's see if it breaks out to new highs in credit. PPO is making higher lows, and it's breaking out to new highs despite being in negative territory. That means that it's a very, very positive consolidation. Housing, look at that, breaking to close to 2000, late 2017 highs, about to hit those same levels. And so long as momentum is above that 69 level over here, this green line, that's a very positive sign for the overall economy. Crude oil looks like, look, every time I say it looks like it's about to do it, it hasn't done it, but it looks like it's about to break above the 50 RSI this time around for real. PPO is very, very close to breaking above zero. And again, based on this video, and this kind of is a reflection of how I do my analysis. First, I do a weekly perspective, then I look at things from a daily, from a monthly. And when I see something like this, where there's a potential breakout coming, that's when I start looking into the sector itself and the individual names. So we'll do a premium review of the oil and gas sector later on this week. Nasdaq is close to breaking above this downtrend here, and I think it's setting up for a breakout to new highs very, very soon. PPO is still in negative territory, but curling higher is a very positive sign that this move has a lot of room to go. Notice the equal weighted Nasdaq is just a hair under all-time highs, which is very, very positive, and PPO curling to the upside. Okay, a couple of ratios. 10-year to the U.S. to the 2-year Treasury. This is the yield curve I was talking about. You might say, well, this is just back testing, and that would be bearish if there's a rejection here, which is true. But I see a number of signs. You've got the 13 about to cross the 26-week moving average. You've got positive divergence. And while there's some resistance here, I think that we're going to be breaking out here very, very soon in momentum and moving up higher and creating a steeper yield curve, and again creating a positive sign for the overall economy in the near term. Junk versus high quality credit. Right now, junk is breaking out with positive divergence, and so that's another positive sign that the overall economy is setting up for a bullish reflation trade to the upside, and would not want to be short at this juncture. Small caps versus the large caps. So small caps just slightly down last week. I still think this is the trade for the next 3 to 6 months, where small caps will outperform the large caps, but it's got some work to do. I would like to see a break above the 50 RSI level before I can say confidently that this move is ready to go. But what I see here is that PPO is at its highest levels since January. And I think on this ratio, small caps are very well positioned for upside versus the large caps. 20-year U.S. Treasury versus the tips. You want to see this ratio break down if you're bullish on the overall equity markets, and it has broken below the 13 EMA with negative divergence. And now it's got the 50 RSI likely serving as support along with the 26 EMA. So it might take some time here, a little bit of consolidation before further downside is possible. Notice PPO is at its lowest levels since August of 2008. So again, deflation is not in the picture right now. Inflation very much is. Consumer discretionary relative to the consumer staples. And last week, actually, consumer discretionary underperformed by 1.5%. And so that's not a positive sign for the equity case, bullish equity case. But look at what we're seeing here in terms of PPO, very close to upside breakout. So I would be looking at consumer discretionary as breaking out soon versus the staples. Notice there's a lot of resistance here. Got the downtrend, you've got the 50 RSI. So no surprise that we had a down week, but I think sooner rather than later, this ratio breaks to the upside. Look at the Russell 2000 has already broken to the upside from this downtrend. It's broken from this downtrend and above the 50 RSI level. PPO has just broken above zero. So the small caps, I'm very bullish on those right now. That's where you want to be, even as the S&P equal weight has broken out to all-time highs, or just about there. I think that, again, Russell is where you want to be. Look at that PPO breaking above zero. Here's the SPX. Same thing, just under the 61 level. I think next week you're going to see a really, really bullish move to the upside in the markets. You've got regional bank ETF has broken out of its downtrend since 2018. It's broken out here, and price is just about ready to ready to follow. Basically, highest point of PPO in an uptrend since late 2017. Semiconductors have broken out as well. Notice the upside breakout. That's one of the best looking continuation patterns. And semiconductors look very, very strong right now. PPO is strong. And guys, everything is very, very bullish right now. If you've got a negative perspective, I suggest you rethink that. And frankly, if you're following anybody who's still calling for a market pullback, correction, or a crash, altogether crash, I'd suggest you delete them from your watch list and never and really never look at their work again, because they're frankly perma bears, and will cost you a lot of money. I'm looking at it from both perspectives. If I feel like the markets are telling me a bearish narrative, I'll share that with you, and vice versa. For the last couple of weeks, if not months, I've been pointing out that there's a lot more upside potential. Well, now it's broken out, and look at the SPY, broke to all-time highs, and I think we're just getting started here, with PPO just starting to curl to break above zero. Total stock market ETF has also broken above this downtrend, and also just on the verge of breaking to all-time highs. PPO just the same as with the other equity indices. Again, next week should be very, very bullish for the overall market. Transportation average broke above this level. So again, really, really nice price action altogether. Now the dollar bounced off of this downtrend. Let's see what happens at that 50 RSI level. Is this a back test before it rolls over? I think that's the case, but time will tell. Here's the developed markets looking really strong right now, just at that 61 level. So we might have a little bit of consolidation here, or we might just take off altogether. It's very, very interesting to watch developed markets, despite all their problems in Europe, breaking to 52-week and multi-year highs. Okay, volatility index, I pointed out that likely we're headed towards 12. And given that negative divergence right now, I think we're probably headed lower towards that 9 level. And that's what gives me some of the biggest confidence that I think that the S&P is headed towards that 24 to 2,500 level in this up move, possibly even closer to 3,000. A lot of upside, and before I get any sense that there's going to be downside. Here's the S&P, or the Wilshire 5000. Again, just breaking above that downtrend right now, very close to all-time highs. Look at the volume over the last couple of months. Despite that, just consolidating very strongly and curling to an upside breakout. So that's it, guys. Let me know what you think. Let me know if there are any stock sector charts that you want me to cover in this weekend review in the future. Shoot me a note in the YouTube or Moneyology comments, and I'll see what I can do. And of course, please check us out at Patreon in the show notes. I'll send a link. So if you want access to these individual videos that are premium, $37 a month is too much for you, then maybe $10 a month will be more affordable. And of course, $1 a week, guys, it's a no-brainer in my opinion. So please sign up, show your support, put a lot of time into these videos, and for me to continue to keep these free can't be done without your support. A lot of time, a lot of money goes into it in terms of hosting and so on. So anything you can do, really appreciate it. Have a great day. Have a great week.